All right, good evening, guys. Catta Tortoise Capital Nightly Strategy Podcast for December 15th, 2022. Start with the sniper trade of the day. So, there was some big down news pre market, and part of that news was that I had unplugged my drawing pad. So please bear with me. That would explain why that's not working. All right. So this symbol on a 3-minute chart. Here's where it closed yesterday. Here was the gap down. It went as high as here and as low as there before closing here. Second bar opened and then immediately sold off through the low of the first 3-minute bar, and that gives us the OR3 entry, opening range 3-minute entry short. We have our standard risk box here. That's the R10 minimum manageable risk box. In that first bar, that since the open it gets that far, we almost have a full R in hand already. And if you look at that gain and decide, you know what, I'm going to take my stop and just lock in that move, would you be wrong? And decide that you're just going to make that your own? And we would call that the no lose plus dinner for two. That makes any future move a science project in terms of our mentality. So that's a good decision to have to make. I hope you suffer making that decision every day. So what this rascal did, continued to sell off, got down this low, moved up to here. This would have been the 1, 2, 3 entry, which I should have been on. It came all the way back to scratch. I was still in it like an idiot. It went down, and then as it started coming back up the second time, disgusted with myself, I just took a very poor exit there for a scratch. Now, that's just as bad as you can be. If you're going to do that, don't do anything. Because here it was, I saw the big gap, I was prepared for it, executed my entry perfectly, had more than an R in hand, and then missed the 1, 2, 3 exit, should have scratched. I let it actually go negative. Then when I had some mojo in my direction, I still let it come back and I walked out of there with nothing. Now that's just as dumb as I can feel. So I forgive myself. I mean, if that's the dumbest thing I do all day, that's not bad. All right, so in the bar where I exited, we see the RL10 rolls over, crosses the baby dragon. It comes up, and then on this reversal, which cannot even get through the dragon, notice the edge of the dragon here, and there's our descending PSAR. It can't even get through the dragon and has already started to roll over. So, in my standard framing, I know that if it goes below this little belly of the dragon, what would we call an entry down here? What would we call an entry in that region? Collapsing dragon. Correct. So instead, I just wait for this thing to roll over, and because of the size of the earlier move and the minor recovery, I would call this one a Catta 2, because we have a high and a lower high, and it is still on the favorable side of the dragon, so I just get short. Catta 2. And standard risk box. Now when it breaks down here below the belly of the RL10, and if it were to break to a new low of the day, that would really be favorable. Now this is why the Catta 2 entry is so powerful conceptually, because folks that are just waiting to see a break to a new low of the day aren't going to get short on this thing until here, when they begin to get short, right? But in the meantime, by taking on that little bit of extra manageable risk, we are in potential of having that gain, which is darn near a +1R. So for taking on the Catta 2 entry in risk, we're positioning ourselves so that when the expected breakdown generates a lot more selling pressure, we're already 1R in hand when other people are just starting to sweat the initial risk. Check or hold. That's the business case to be in favor of the Catta 2 entry. The fact that we had large gap, the market was suffering, it already had a continuation to the downside, and then the recovery could not make a new high of the day, which is up here. It rolled over here before it ever got up into there, and now it has started to roll over. That's everything in our favor. That's the justification for the Catta 2 entry. Check or hold. So we've had our first warning sign already on this one, and that is after the initial burst, recovered. Once again, it failed before it got through the dragon. I consider that to be healthy. But the RL10 is reversed. It has crossed the baby dragon. At this point, to me, you have to either have your stop at the PSAR dot, which should be right about there, which is practically a no-lose plus dinner for two, because you've got that little wedge in there already. So I can make the argument why, your stop should at least be here. It could be at the top of the dragon now, or the spine of the dragon. Any of those. So tell me where you think you would put your stop here based on that analysis. 1, 2, 3. Realizing that your price action is right here. That's where price is. Yeah. I kind of like 2. Just splitting the difference, top of the dragon. I'm not ashamed of that one. They all work until you get to here. Then by this time, at a minimum, you should be here, because now you're on the far side of the dragon. That's actually where the dragon is. So 2 or 3 are going to get you paid pretty well. Almost a full R. Nothing wrong with that. I waited for the RL10 to come through the dragon. And the PSAR flip. And now I'm noticing, just in my little standard framing, that double bottom in the RL10, and I would treat any entry below that red line is what kind of an entry? And we'll call that a collapsing dragon. Any entry below that red line, any entry in this region is a collapsing dragon. So I take the collapsing dragon. So that's a collapsing dragon right there. Standard wrist box. Check or hold. That's feeling pretty good. Now, at this point in the trade, we're entitled to say, hey, look, 1, 2, 3 PSAR dots. Let's see what we can do on this. Oh, I had it backwards. I'm sorry. It's on the wrong side of the doggone. Yeah, I moved the office out of the basement. I had the microphone turned backwards. Sorry. Okay, so now we've got a favorable move. All right, so we've got 1, 2, 3 PSAR dots in our favor. The market has moved all the way down here. At our maximum favorable excursion, we're probably at +2. So we've got to have our stop, which started here, at least to the PSAR, maybe to the skin of the dragon, the spine of the dragon, the belly of the dragon. If we were going to take the belly of the dragon, we should just get out. That's not an unreasonable position. But at a minimum, you want to be at 1 or 2 or 3. 3, you're very close to getting out anyway. So we want to lock in at least 1.5 on that one. So the exit we take is just the PSAR. Again, I'm just using the RL10 hitting the PSAR as a standard exit on this one. Reduces some of the complexity. And I considered strongly taking the SSC. I elected to wait. I see the PSAR flip. I wanted to get some room. I finally take, after it's moved an MMRB off the bottom, I take the I still consider that an SSC, a little slow. And it gives me a half an hour loss. The difference between entering here and here doesn't make all that much of a difference in the long run. Maybe 0.4. I would still do that again. This was such a significant downward move and the market was getting murdered that I was not really in a hurry to get that any sooner than this. So that was the venture to the upside. It didn't work. So that becomes a stop and reverse on the PSAR flip because we've had two successful trades to the downside already, and the upside trade was a failure. So that makes this little Catta 2 easy to take. And then if it breaks down below this blue line here, we would call this a CD, collapsing dragon. And so again, we're just front running. We're front running that little extra piece. Check or hold. All right, so the move moves out in an orderly fashion. And you see that RL10 just continuing to drift down with the dragon, with the PSAR. We're through the lunchtime. This is at lunchtime sideways, and it's picking up that downward motion that we had in the morning session. So this just feels like an orderly progression. And I don't mind just trailing it with the PSAR by this time because we will have locked in. We will have locked in about 1R if we take the PSAR exit, and that feels correct. And we take the orderly PSAR exit. I thought strongly once again about taking essentially the same trade that I took here, which was not the pure piece or not the pure SSC, but I thought about waiting for the delay. What I actually did was waited for it to break above this entry or this resistance level here, which we would now call this an emerging dragon. There wasn't enough room in here to really justify the full trade because I thought resistance at that level would have been unsurprising. And so if this gets up into here and starts to fail, I'm actually looking to get a Catta 2 to the downside. So there just wasn't enough room inside here. And plus, like I said, the whole market was getting murdered. But when it gives me the emerging dragon, I go ahead and take it. And now, of course, in retrospect, you wouldn't be a trader if you didn't torture yourself and say, you see, I could have had this stop and reverse, and then I would be, yeah, of course. So just tell the monkey to shut up and get in the back seat. Go peel a banana with your feet. Now moving nicely. Here's the first wiggle in that upward move. You know, it has a really nice move all the way to here. This is that first little weakness, but it is already starting to work. And now notice that the R10 has just a slight wiggle. And now if this breaks out higher, that's going to be very good. And so at that point, if I'm using the PSAR, I'm only at break even. So really, right by about this price level, I want to have moved my stop up into here. And now at this moment, I can think about getting my stop at the edge of the dragon, spine of the dragon, belly of the dragon. Any one of those is legit. But what I'm really hoping to see is this thing moving out. Check or hold. It does move out. It breaks above that previous high. So I'm feeling pretty good right here because now we have 1 unit of risk, 2 units of reward. It's past the first test. It's well above that support level or resistance level. So adding the second position at the 2-hour battle drill, off we go. By this move, I should have those 4 choices. 1, 2, 3, 4. Yeah, and as the chat is saying, Cliff, which is the least surprising information of the day. Oh, look, we're trading Cliff. We should not be surprised that that's the case. And standard exit at the PSAR. And now this one returns. Let's see, 1, 2, 3. 3 on the first position, an extra 1 on the second position. So that little counter trend rally is worth about 4. So turns out to be a pretty good day at work. So in retrospect, we get a tale of 2 trades today. You know, that first gap down and then the orderly sell-off. And then in the afternoon, you know, 2 p.m., that last-minute PSAR flip and closing rally, which gets it all the way back, basically, to the previous high of the day. And then all the people that made money in here don't want to hold that position overnight, and so they start unloading that position. All the buyers are now sellers, and everybody who wants to short this thing, like all the people that got short and made money in here, that's the only people left in the trade, and so there's another afternoon sell-off, which gets halfway back from the peak of the day to the low of the day. That retracement was 50%. So, geometry. All right, let's look at the sectors. Oh, I guess we'll look at the market first. Sorry. Here's our 30-minute charts. So this is the S&P on 30 minutes. Here's our 5-day look back, 10-day look back. It was important to see that the previous 10-day low, which was here, got violated early today, and when it did, that was the sharp downward move, and then only in the afternoon did you get a retracement of 50% back. But anytime that 10-day low breaks, boy, that's just a sign of weakness that can be exploited. Right? So we've got a very wide or tall 5-day range. That's as large as the 10-day range. So this is a very volatile 5-day period. And all the previous support levels that triggered these moves have all broken. And so now if this support level from today breaks, the next price down is here, or back to 375 already. And just a couple days ago, we were talking about, is this thing going to get to 420? And here we are back down at 390 already. So that's characteristic of bear and sideways markets. Here's our daily. And you can see how when it got below yesterday's low and broke the collapsing dragon, this was nothing but pain and just a little bit of recovery. So the move back again to 375 is, that would not be surprising. We are deep into oversold. Here's the first support level. And because this was a gap and go, none of this has anything like support. So a breakdown below today's low could very easily trigger free fall to 375. Here's today's performance of the sectors. we'll start with the S&P. S&P was off 2.5% today. The Russell 2.5. Emerging markets minus 2.3. Diamonds 2.2. Treasuries were up a fraction at 0.15. And tech was even worse. We're going to look at the downside first. So again, now the S&P 2.5, first big cluster, lumber, biotech, materials, and wheat and precious and wood, down 3.2%. ARC Genomics and S&P Tech, 3.75. Marijuana and the FANGs, boy, that has vapored a lot of money right there, 4.6. ARC Innovation, 5%. Ethereum, 5%. Squarespace and Coinbase, 5.5, 7.5. Here's our metal. Let's take a look at our metals. There's Alcoa, Cliff, and U.S. Steel. So the metals, another big day down, 3.75, 4.1, 4.9. And they were worse than their materials counterparts, so the metals continue to be down. That was also the case yesterday, and so that makes it easier to find and trade CLF as soon as it's showing weakness. By similar token, we'll take a look at the semiconductors, which were also weak yesterday. And here you've got NVIDIA, Intel, and Texas Instruments. So your semiconductors are all down. And, 2 out of the 3 were worse than their tech counterparts. So semis are weak, not quite as weak as metals were, but still pretty bad. Even, Apple and Microsoft were worse than the S&P, so that was a pretty damaging day all around. To the upside, now there were some actual surprises in here today. We'll take a look at them. There's our baseline S&P, 2.5. So Bitcoin, clean energy, Mexico, finance, lithium, oil, staples, the Aussie dollar, discretionary, real estate. We're still 1.5% down at that level. Now, commercial real estate, blended commodities, Brazil, agriculture, that was the break-even marker right there between losers and winners. So Brazil and agriculture, not quite so bad. Oil exploration up 0.4. The VIX up 6.25. Tesla, to me, was the anomaly today. And that really is going to get our attention tomorrow. On a day when everything big in tech was getting crushed, Tesla, which has been on a slide and is up 0.5 and closed above 150. That's the anomaly. What does it mean? Are we ready for tomorrow? It's the most important stock. It's going to be a mover again tomorrow in a big way. Its R10 is $1.40. The intraday move could be $14. That's a 10% intraday normal range. That's pretty remarkable. All right, let's look at the traders today. All right, here's Satya with EWZ on the 3 minutes. Boy, he's doing a nice job on this one. There's yesterday's close. Here's the opening range 3. There's a PSAR flip. He plays the breakout above the OR3, standard risk box. He takes the initial gain and makes 0.5. Notices the rollover, enters the dragon, leaves the dragon. He sees the PSAR flip. I think was a little slow on this, but, you know, that's still a good entry. There's his standard risk box. It breaks down again. He's got 2R in hand, adds a second position. This thing runs down further, finds support at yesterday's support level, and begins to recover. He cashes it there and gets paid on both those positions for 4R. There was a PSAR flip available in here, which probably should have exited there. And then a Catta 2 somewhere in this region, and then an emerging dragon available here. Doesn't get this one, but does take this one, a risk box off the top, failing right where it failed earlier today. Gets a second position on, cashes it for 1.3, does a Catta 2 re-entry for 0.9, comes home with 6.69, and not even getting that major move inside there. So that's a pretty good day at work on one of our frog champions. Well done. This is Tesla for Kyun. This one was tough. This was choppy, unlike the rest of the market, which was in full meltdown mode. He gives a reasonable shot on this one. Quick scratch. I think the rollover entry on the short side, you'll notice, will be okay right there, is a collapsing dragon, which is better than this monkeying around. And he doesn't win or lose much. Where he was looking for a breakdown in the 52-week low. When that doesn't happen, that becomes a potential, PSAR flip and go. I like that you didn't chase. FOMC comes along, and there were some micro losses in here until he got the one that was moving for 0.7, which brings him back to a reasonable learning day today. There just wasn't much room in Tesla today. He does play EWZ, much like Satya does. The best mover he could find today. He does a nice job getting paid inside here. Doesn't chase. That's a reasonable scratch. I think on this one, what you could look at is the double top 1, 2, 3 entry, or at least get the entry here, and then you would have paid off a little bit. But study Satya's. That's a good point of comparison. Nice work, though, today. Here is Nolan on Tesla. Yeah, Tesla was hard today. There wasn't much. He doesn't win or lose much in here. There just wasn't anything much happening here, although he did get paid on the move that was there. I like this effort. I like the scratch. I think your short could be right here instead of here. Then that pays off better. And I like this point. Last week, he was chopped up on a day like this in Meta for -5, and today was only -1. And that leads me to the point. The difference was 4R. The R multiple of learning, what is your expectancy on learning? Well, today that was a 4R net improvement over previous technique. Loss avoidance. So the metals were moving, and here, tech was moving today. So yeah, Apple, the OR3 would be here. That's still a reasonable entry. I like the cover to get paid. I like the Catta 2 re-entry. Good scratch, good re-entry for 2R. Really nicely done. I concur with your comment that that was a good scratch in the chop. Yes, it was. When that doesn't work, done. But then when it doesn't even break through the VWAP and rolls over again, that was really nice. Notice that the PSAR had just flipped too. That is really a nice entry. And that was worth an R. Let's see, Microsoft. So the OR3, maybe we can cut it here still. That's not bad. When this rolls over and starts failing, I like that short. I like that short. I like this short. And then if you're short on any one of those three, this roll over and then it hits the edge of the dragon, that's where you cut it. Good job staying out of the chop. I like this PSAR break and go. That looks a little premature. Yeah. And I think it was just trying to get some of that entry, some of that loss back. But you got to let those trades breathe a little bit. That's still a pretty good day. Yeah, so that's that. Let's go to the daily report. Dashboard 1. We went from sideways normal yesterday down into bearish normal once more, a disappointment, and 375 is in play. Even though the internationals had some nice moves to the upside and are postured for a channeling rule because they are now above their 200-day moving average. I would, because the S&P is in such weak conditions, I would be cautious on those two, but it's there. Still, the winners: Johnson & Johnson, Procter, Merck, Pfizer. 4 out of the 5 are pharmaceuticals and healthcare. Tesla, to me, was the anomaly. It's really been crushed, but today's little micro gain in the middle of all this other pain and suffering, very interesting. The metals are certainly in play, and so is Brazil, as we saw already. So lots of good ideas for tomorrow. This was the story of the day. It was all of these breakdowns, plenty of auto framers to contend with. I'm not playing this as a swing trade anywhere. These are all strictly one-day trades for me. Looking to find the movers with the usual suspects. The ETFs show the same kind of patterns as the individual stocks. Lots of auto framers, lots of breakdowns. Treasuries showing resilience. Brazil showing some recovery. So lots of Godzillas now in the S&P. Here's some. These two, NTAP and CHTR. That double enraged Godzilla. Don't be surprised at nothing in the tactical symbol set. The one-day movers were not exceptionally movers, and that's mostly because there was a lot of movement in the gap. But the rest of the follow-through through the day was not actually all that extraordinary. Emerging markets, kind of a surprise. 1.5. Yeah, I like the double green. Those are the ones that I'm interested in. Tail of the tape, just pain and suffering everywhere you look. Yep. I think we're at a crucial state right here. Critical state. This 390. This whole thing has got to hold, or it's back down to 370. That's got to hold. If it fails, look out below. All right, that's everything we got for today. We'll get this published and processed, and we shall see you tomorrow.